Welcome to Business Talk here on businesstech.co.za, South Africa's go-to online business talk show. As always, I'm your host, Michael Avery, and today we're opening up our virtual wallets into the world of cryptocurrencies and more specifically stablecoins. Now, as we see the cryptocurrency market continue to evolve and expand and become shall we say, more mainstream with the likes of crypto ETFs, and stablecoins have emerged as a crucial player, offering a digital alternative that's pegged to more traditional assets like the US dollar, thereby providing stability in a market known for extreme volatility. To help us unpack this very complex yet fascinating topic, we've got two, I can call them distinguished guests because they really are a distinguished guest with us today. Firstly, Paolo Ardoino, who is the CEO of Tether. That's the company behind USDT, the world's first and largest US dollar stablecoin. And Aleks Andjelopolj, who is a GM of Experience at Luno, which, as we know here in South Africa, is a leading cryptocurrency platform that recently added Tether to its offerings. We're going to be exploring some of the nuances of stablecoins and their benefits. So, chaps, great to have you on the show. Aleks, maybe you can kick us off and just set the stage here. What is the difference between a stablecoin and other forms of cryptocurrency, and how do they operate differently in this world of crypto assets and cryptocurrencies?
Great. Thank you, Michael. Thank you, Paolo, and welcome to all your listeners. It's an honor to be here. Absolutely, Michael. I mean, at a high level, the key difference between a stablecoin like Tether and other forms of cryptocurrency lies in the stability of its value. So many cryptocurrencies, Bitcoin, Ethereum, they're quite renowned for their price volatility. They can experience significant price fluctuations within a short period of time. On the other hand, a stablecoin such as Tether is designed to maintain a stable value, typically pegged to a fiat currency. In the case of USDT, that's to the US dollar. Tether does have some other stablecoins that they've also issued, which are very interesting. For every Tether issued, there's a corresponding US dollar that's held in a reserve on a one-for-one basis. And essentially, that peg, one Tether is equal to one US dollar. So it provides a level of predictability and stability that means that really appeals to new and seasoned investors. So it makes Tether an attractive option to enter into the crypto market, to hold your currency in a more stable coin, and then be able to move in and out of cryptocurrency positions thereof.
Really great summation, but I want to hear, Paolo, from you. You know, as the grandfather of stablecoins, effectively, and from Tether's perspective, you've been at the vanguard of introducing this technology. What do you see as the main benefits of stablecoins like USDT compared to other cryptos, and how do they fit into the broader digital currency ecosystem?
Yeah, first of all, thank you very much for having me today. So, when Tether created the first stablecoin USDT in 2014, the main usage of that was cryptocurrency trading settlement. You have to move Bitcoin in order to trade across multiple trading exchanges. Back in 2014, there was Bitfinex, Bitstamp, Coinbase, Kraken, and just a few others. Today, there are so many, but in the past, there were just a few. In order to move money from one exchange to another, you could move Bitcoin very quickly. In 10 minutes, the Bitcoin block time is 10 minutes. You can move it very fast. But moving dollars was requiring international wires, would take days to move money from one exchange to another. And so the arbitrageurs, that are the traders that sell on the exchange where the price is higher, for example, Bitcoin, and then take the dollars, move the dollars on the exchange where the price of Bitcoin is lower, buy back the Bitcoin there. I take two this very important, useful process in order to keep the price of Bitcoin stable and aligned across all the different trading exchanges was basically impossible, just because you have to wait days for international wires. But USDT was just a dollar on a blockchain. So the very simple but genius idea of USDT was, okay, let's take the brilliant technology that Bitcoin created, blockchain, and let's put the most used currency in the world. That was the US dollar, that still today has more than 60% of the global trade. So not rocket science in a certain way, but so the way USDT and its usage evolved over time is that today, of course, is still leading the cryptocurrency trading volume, and the volume of USDT across the board is higher than Bitcoin, Ethereum, all summed together. But there also is major shifts in the usage of USDT. It's not only about the cryptocurrency trading settlement, but it's also about just having a digital dollar on your smartphone, right? So billions and billions of people don't have bank accounts. They don't have, not because they are bad people, right? They are called unbanked. They're not because they are bad people, just they are too poor of being interested of the banking system, right? And so they have a desperate need of having access to the US dollar, just because their local national currency is waiting very quickly. And so they resort to USDT as the digital dollar. So as of today in 2024, after 10 years, this will be the 10th year anniversary of Tether. I wouldn't call necessarily USDT a cryptocurrency for billions of people, but actually, well, as of today, Tether has around 350 million users globally. It's just a digital dollar. It's just a dollar. It's like you take a dollar and instead of moving it through a centralized database like Venmo, PayPal, you just change the rails. It's just, you use blockchain as a transport layer, different transport layer. And so it's a digital dollar made for people that are living in emerging markets, developing countries, and the native crypto people.
But those rails, though, and that's from my money, that's the no pun intended there. The big difference is because those rails, as we know in the crypto world, are so much more efficient, real time, instantaneous, borderless, and you don't have all of those other issues when it comes to remitting dollars intra-Africa, for example. I saw a World Bank study for a remote Tanzanian worker. It costs up to 25% of their monthly wages working remotely to remit funds back into East Africa from further south in Africa, where they come and look for employment opportunities, which is prohibitive. Using USDT, you're now getting over those inherent inefficiencies in the traditional sense that we've built up around fiat currencies. How does it work, though? Can you explain in a kind of almost non-technical way for a broad audience how it actually works and how you achieve that reliability in a market that is filled with alternatives? USDT has still been the most stable.
Yeah, so definitely there's competition. Competition is always good. In the end, it's without competitors, you would not have an industry, right? You would be just alone, just a project. So, the beauty of the stablecoin industry is now is $150 billion market cap. 117 billion is USDT. So it's around 70% of, if not slightly more of share. So the reason why USDT is so trusted is that for the last 10 years, USDT and Tether were able to withstand the trial by fire. So we survived to many different attacks from traditional financial system. You mentioned, right? So 25% charge to people that want to send money to their families. Imagine a worker, he leaves, that person goes into another country to try to provide for their families, work the entire month very hard, and then at the end of the month has to send money home, and he gets charged 25%. Is not only prohibitive, but is very unfair, right? Imagine charging that amount of money to move money in a ledger. I mean, the amount of intermediaries that this world has today is just insane. It's not practical. The humanity is trying to go to the moon, and yet we charge 25% or we try to go to Mars, and we charge 25% just to move a little bit of money from one country to another. These cannot keep going, honestly. And so one of the things that I'm most proud of at Tether is being able, have invented basically a technology that makes it seamless, makes it basically free, right? Borderless, is competing with MoneyGram and all those companies that are charging insane amount of money to, the people that actually need the most, saving that money for their families. And so while all these attacks in 2022, Tether was subject to a short seller's attack. And, the most important thing that the stablecoin needs to do is to maintain that path, right? most importantly, to be able at any point in time to give back the money to people that want to withdraw, they want to redeem. So in 2022, $7 billion were redeemed in 48 hours from Tether, from USDT. And more than $20 billion that were like 25% of our reserves were redeemed in less than 20 days. So we did it without the blink of an eye. So we didn't have any single problem to process any single wire. And if you think about it, banks like Silicon Valley Bank, Silvergate, Signature, Washington Mutual, or New York Customer Bank, or Community Bank, all went belly up in the last 2 years, and they couldn't survive to more than 10% withdrawals. So proving that Tether is more than 100% backed. So on top of the 100% reserves that you have to keep in order to back all the tokens that we issue, we decided to keep $5 billion more in the reserves to over-collateralize the stablecoin, while banks lend out 90% of the reserves, so they are collateralized 10%. We have 105% of reserves. So we decided to imagine we made $5 billion in profits that we decided to not distribute and to keep in a stable coin. Why? Because the 350 million people that are using USDT are not the wealthy Wall Street guys. They are not the bankers. They are not living in very rich countries. Europe and US don't need stable coins. I describe it in a very simple way. Trying to sell USDT to an European or an American is like trying to sell a bucket of ice to an Eskimo. Right? There is no point. There are billions of people that need that, and they need it in their daily lives. So for us to be able to prove that we are so solid that we could withstand what banks all around the world, and including the US, could not withstand, was very important. And last year, our main competitor was almost died because they had like $3 billion in uninsured cash in Silicon Valley Bank. So that they almost died. And FDIC, that is the federal insurance in the US, came in and saved the bank, so they were safe. But the risk management, I think, that Tether has is a distinguished factor compared to anyone else's.
Yeah, and it is what differentiates you from traditional banking, where banks, primarily as deposit-taking institutions, shouldn't be taking that kind of risk and that kind of leverage risk. And I think it's an important distinction that you make, because many think that the crypto world is indeed more risky, when in fact, if you look under the hood, it's actually less risky than what we see in some traditional banks around the world. You mentioned that you don't really need to sell it to Americans or Europeans. So what other stable coins do you offer? And why is a dollar-backed crypto important amongst your other stable coin offerings?
So we tried different flavors, right? So we have USDT, of course. Then we tried Euro Tether. We tried the Mexican pesos Tether and the Chinese yuan offshore. And then the last one, actually is not in order, but I think the most interesting one is Tether Gold. So in order, Tether USDT has $117 billion on market cap. The second one in market cap is Tether Gold. And then the rest has almost no usage. Even our competitor launched a stable coin that has basically no market cap compared to their US dollar. The reality is that if you live in Europe, if you live in the US, you have 2 debit cards, credit cards, 1 or 2 bank accounts. You can take loans, you can take credit, you have tens of ways. If you are in the US, I think the US surpassed $1.4 trillion of debt taken out from the debit cards and credit cards. So, and they have Venmo, PayPal, Cash App, 15 other payment methods. So for them, adding yet another payment method doesn't matter much, right? When it comes to, whenever you create a product, that is a spoon, that is a fork, laptop, whatever, you need to understand what is the product market fit. Who are your customers? And if you have 60% of the global trade happening outside the US, settled in US dollars, and you have national currencies like the Argentina peso, the Turkish lira, in Vietnam, their national currency, Venezuela, and all like the global South, Central South America, many countries in Africa, many countries in Asia and Middle East. The common denominator of all these countries is that their national currencies are going down the bin. And the US dollar is not perfect, right? We saw how the US dollar printed $2 trillion in 2023, a year where nothing happened, right? No, there was nothing major, yet $2 trillion were printed. Yeah. Yet the US dollar is just better than any other of these fiat currencies. So it's like the story of the two friends running away from the lion. And one friend tells the other, oh, well, we need to really run fast because, the lion will going to eat us. And the other friend replies, well, I just have to run faster than you to not be eaten, right? And so the US dollar is the friend that runs faster compared to all the other fiat currencies. And that's basically it. So the why USDT is so used, is so important, is just we understand up to 2022, we didn't even have a marketing team. So the word of mouth allowed USDT to achieve hundreds of millions of users that just needed the dollar. Then the Tether Gold alternative is very appealing because up to 1971, actually the US dollar was backed by gold, right? There is sorry for the term, but there is a website called What the Fuck Happened After in 1971.org or something like that. And it shows that as soon as US dollar, removed the gold as backing, inflation and the purchasing ability of people went down, right? So, before with 1 year salary, with just one salary of one household, you can buy a house in 1 year house, or you can buy a car. Everything was not easy, but it was sustainable for a family. And after that, with the debasement of the US dollar and that all the other currencies around the world, that really created a domino effect. So we think that the gold being the currency that has been and the store of value used by humanity for the last 5,000 years as a store of wealth, is a very interesting alternative. So in my order, I'm a Bitcoiner myself. So my order, so there is Bitcoin, that is the most beautiful and well-designed currency in the world. Then there is potentially Tether Gold and USDT at the same level. They offer two different flavors, but very, very useful for billions of people around.
Yeah. Yeah, I mean, everyone remembers that 1971 moment when Charles de Gaulle, sailed his ships in asking for all his gold back, and the U.S. administration, then took this decision to depeg the dollar from gold, and the rest, as they say, is history. We've seen a lot of central bank buying of gold ever since the U.S. tried to weaponize, to some extent, the global payment system by freezing Russia out of the system after it invaded Ukraine. And gold touched a record high in the last couple of weeks. So really strong and compelling use cases there. Aleks, Luno recently added Tether, specifically USDT, to its platform. What were the main factors? Take me through your thought process in your decision to support Tether. And was there a specific demand from some of your customer base or a strategic vision that guided this choice?
Yeah, so thank you, Michael. So much of what Paolo's touched on really speaks to the heart of why we consider Tether. Just shy of $120 billion in circulation, the most adopted stablecoin globally. And even as competition heats up, we're seeing a plethora of new stablecoins being issued. USDT continues to dominate and gain market share, in fact. So we've got quite a variety of customers. We've got retail investors, we've got the man on the street, we've got traders, business customers, institutions, solid demand across all of these target customer groups for Tether, particularly in the countries of South Africa and Nigeria. So if you recall, South Africa and Nigeria both have a degree of exchange control, and ultimately, the likes of Bitcoin may be drastically reshaping the global financial landscape, but that common reference currency of a dollar is still unanimously global and understood. So by and large, this is really where USDT absolutely hit the nail on the head for us. Tether's essentially digitized and tokenized USD stable. It removes borders, it removes barriers, it stimulates adoption for crypto, it stimulates velocity of money within a country. And many cryptocurrencies are also priced in USDT. So Paolo also mentioned around just, if you look at the volume traded of USDT, how it absolutely dwarfs anything else out there. Liquidity is deep. And then you've got things such as the online disclosure of the independent attestation report that just provides evidence of sound collateral reserve management that, combined with being battle tested, being able to have a 25 withdrawal of reserves and being able to honor that, that's pretty remarkable. And it meets all of the criteria for Luno to list such an asset.
Thank you, Aleks.
Yeah, it certainly is kind of a no-brainer when you put all of that together. From the data that you've got at your disposal, what are you seeing as the primary reasons that your customers are buying and using Tether? Obviously, you said the big use case between Nigeria and South Africa around exchange controls. Are they using it more as a means of transacting, of moving money, more of a store of value? So maybe as part of a hedge in one's portfolio, or for some other purpose that we might not immediately think about?
Yeah, great question, Michael. So obviously with respect to exchange controls, Luno is, positions itself as a highly regulated and most trusted crypto exchange within emerging markets. So we do everything within the ambit of the law. And ultimately what exchange control does is it creates inefficiencies, it creates excessive demand of dollars where there isn't actually physical supply. Now, if we look at like our retail investors and traders, they would use our instant trade or our exchange product. And ultimately, Luno supplies a lot of the local to the local fiat to crypto on-ramps. But many of these retail investors, the man on the street, the woman on the street, they don't want necessarily exposure to volatility. And also they want to hedge out certain risks that they may be experiencing, depreciation. For example, we've seen that happening quite extensively in South Africa, with the rand only recently turning a corner. Similar in Nigeria, inflation has been a concern globally and particularly within emerging markets. And to do so in a regulated, safe manner through Luno, and also in a cost-effective manner, the cost of being able to just pay your friend, it shouldn't be exorbitant in these emerging market currencies, and it's what something like a stable coin such as USDT really does offer. So there's a lot of peer-to-peer payments that happen within country. From a business, trade, and institutions perspective, again, because of exchange control, there's lots of arbitrage opportunities, and Tether can serve as a mechanism to take advantage of this arbitrage, and which are differentials in the price between different regions. So they can use this through, for example, Luno Trading Desk, which offers USDT, or for example, through our exchange, which then just results in a more efficient exchange, better pricing, and lower arb opportunities. Now, what's also interesting, Paolo touched on this, but we also get lots of incoming requests from corporates to want to better improve, for example, their capital management cycle by facilitating lightning fast, regulated cross-border payments at a fraction of traditional banking costs in a market that operates 24/7, settles near instantaneously compared to a T2 to T+5 days if there's a couple of public holidays, minimal counterparty risk, and it's open and transparent. Now, what is interesting about this is, if we can lower the cost of corporates being able to move money, manage their working capital cycles, that should ultimately filter through to the end customer through better pricing, better competitiveness. So that is something that is certainly also a trend that is emerging.
And, with some of the Rand strength recently, to be able to take advantage of that in a near T0 type environment rather than the T2 to T5 that is the traditional space is hugely compelling from a treasury management perspective as well. If you look at it, Paolo, from your vantage point, I'm sure you've seen some interesting use cases for Tether, but what do you see as the most significant, both for individuals and businesses, to build on what Aleks has just been saying?
So I would summarize the different usages of USDT as, of course, cryptocurrency trading settlement, easy one. Then I was reading an article of from an Argentinian published by Forbes, I think, talking about an Argentinian exchange, and it was saying that many people on that exchange are using USDT not to trade but just to hold. Right? It's basically becoming a checking account and savings account for many people. And I think that, if you only in certain areas, you can like Haiti and others, when you never had the ability of using a bank account, and now suddenly through your smartphone, it's you finally have the ability to start savings, right? First, you start, you can hedge yourself against your national currency issues, but then you can start accumulating money, and you can do that through USDT. Then for the first time in your life, you have a savings account in US dollars, and that is a very, very important use case. But on the business side, we're seeing a huge demand of USDT for cross-border commodity trading, right? So imagine like you buy cotton, you produce t-shirts, like you have to buy cotton or other materials, or you almost buy anything. Nowadays it's much easier to do that in USDT rather than trying to send a banking wire. Again, banking wire takes a lot of time. It takes it really requires to like many intermediaries to get it settled, especially if you send it from I don't know, Europe to a smaller country. It's very painful. And I heard someone saying, oh yeah, but there is less traceability, and there are less controls. Actually, this type of the people should understand a bit better how blockchain works, because if there is something that is transparent, traceable, is actually the blockchain. Right, so imagine you have among the biggest commodity trading firms nowadays, today, using USDT in a very transparent way. And the beauty of blockchain is that no matter what you do, no matter what who you are trying to convince, there is no way to change the history. There is no way to remove transactions. Everything you do on a blockchain will remain there. There's no way to wipe it out. So it actually pushes for a higher level of due diligence and compliance. So imagine try to track illicit activities through 5 different banks. The money moved different geographically in 5 different jurisdictions. Imagine law enforcement trying to get 5 different courts to issue orders to get information. While on blockchain, everything is transparent. So with USDT, you reduce by orders of magnitude your ability to do your business, right? If you are a commodity trader, you cannot wait for ages to get cotton or get any, raw materials to do your business and to continue your activity. You need it fast. You need to be able to pay fast. And by the way, you can also check, or if you are the seller, you can check on a blockchain address if basically the ownership, or you can get an attestation from blockchain on the fact that someone has in effect all those USDT that he claimed to have in order to pay for the order, right? So it unlocks so much that was never there in the history of payments, and is much more transparent and allows the much higher scalability that is very much needed in this moment in time in the world.
I mean, that's really what excites me about a lot of the talk that we have around central bank digital currencies, is the fact that if you've got something on the blockchain which has this immutable ledger that cannot be fiddled with or fraudulently erased or misrepresented, we go a long way in building further trust in what happens to our tax rands or dollars or wherever you're based, and in ensuring that we actually root out corruption, which is so rampant in the emerging South as well. I'm sure you must get, Paolo, the question around trust and security in crypto all the time. Because there have been, it's still a very nascent technology. We're still in the very early days of having digital means of transacting for a digital world and replacing those old rails that were really built for systems around physical assets and moving those things physically. So when you sit down and you say, well, this is the evidence, these are the insights that I can give to reassure you that Tether is trustworthy and secure, how do you respond to those who still have misgivings or doubts around the trust and security issues?
First of all, I think that genuine distrust is very important, right? This entire concept of don't trust, verify in the Bitcoin world, that is very, very important, right? So questions should be always asked. So, but there are two types of skeptics. The first one, that is the legitimate one, is the one that wants to, ask the hard questions. They want to see, of course, we have the attestation that we publish every 3 months by a top auditing firm. And also, as importantly, we proved over the years to withstand trials by fire with huge redemptions. Right now, even, at Bitcoin 2024 in the US, and at the beginning of this year, our major custodian of our treasury bills, which we had, more than now around 100 billion in US treasury bills in these facilities, went publicly saying at 2 events, stop saying that Tether does not have the money. I am a primary dealer with the US Fed. I have their T-bills. They have the money. So it's like having Larry Fink from BlackRock going public and say, this customer is safe and I can see their money. They have the money. This is unprecedented because the level of attacks that we had from traditional mainstream media or detractors coming from the establishment of the banking system have been insane for the last 10 years, right? So because actually, with USDT, we invented the holy grail of payments, if you think about it. Right? So it's like, but also we invented something that is much more efficient than anything before, much more transparent. And so sometimes you start doubting why people attack something that is fully reserved, right? So why anyone would ever prefer, who profits from the fact that we still have unreserved banking? Who profits from the fact that we have non-transparent payments? So you start thinking, well, sure, I'm getting these attacks, but someone is really pissed because we are proving that we can be extremely profitable because Tether is extremely profitable with fully reserved banking and with transparency. So I like to respond to these type of questions because I have a lot of material to prove that we are doing the right thing. And, when I ask the same questions to banks, I hear crickets.
Well, as you say, if you weren't being attacked, you wouldn't be viewed as a threat because you are to the incumbents and the way they've been doing things with very little innovative competition. Yes, there are different banks out there offering pretty much the same thing commodified with very little differences in terms of fees. And here comes a technology that completely revolutionizes things. I think it's understandable that you're going to attract a few spears. From a platform perspective, Aleks, from Luno's perspective, yes, we know the market's volatile and obviously safety and security and whose keys and all of that. What measures does Luno take to ensure it remains a trustworthy platform for customers to buy and sell cryptocurrencies, particularly with new additions like Tether?
Great. Thank you, Michael. Yeah, great question. And essentially there's two fundamental factors at play here. So one is around the assets that we actually offer to customers on platform, and the other one is around the protection of their identity and their assets on platform being cryptocurrency and fiat. Now, Luno operates as the most trusted, regulated, centralized platform across emerging markets, particularly in Africa and APAC. And we have a very robust coin curation and listing process. So every coin that's listed on Luno has gone through a comprehensive process involving screening for minimum eligibility, followed by assessments from a variety of subject matter experts across different key business units, ranging from legal, product proposition and product market fit, technical and security, anti-financial crime, and regulatory compliance. Now, this assessment is documented. It's sent through to our digital asset selection committee, which I chair, and this is where it's vetted by the committee of senior leaders and execs within Luno, and it's either approved or rejected. And I think what's really great is we've rejected coins because they don't fit our criteria, or there's security risks, or there's potentially financial crime risks. And Tether flew past that with flying colors. In addition to that, the heart of a cryptocurrency platform is custody of the assets, and ultimately we have, I'd say, one of the most advanced key management services within the areas in which we operate, and that just absolutely holds our customers' assets exceptionally safe. Yeah.
And do you see a future, Aleks, where Luno might support additional local fiat stablecoins? So, for example, if we have a Rand-backed stablecoin, a ZAR coin, for example, and what are your thoughts on the idea of having a ZAR coin in the South African market?
Yeah, Michael, it's a topic of much debate within Luno. We're keeping an eye on what's happening in a number of other markets. For example, Paolo mentioned listing of some of the other stable coins, and I believe you just released the dirham, Paolo, which is pretty interesting. Now, as we see the adoption of crypto and crypto rails, ultimately, people's expenses and liabilities are not necessarily in USD. So at some point, they also need to go and to be able to transact in their local fiat currency. Now, as we see this adoption, as more local merchants and service providers are happy to receive either through the rails of crypto or cryptocurrencies themselves, more real world assets coming on chain, and that demand will just grow from those non-crypto savvy consumers. And we expect the demand to increase in local stable coins. Now, this demand may only be 5 years away from now. The problem is you can't start in 5 years. It's too late. If you want to establish yourself as the most trusted and integrated, sort of stable coin, you need to start early. Paolo's been at this with Tether for 10 years now.
Yeah.
So I think that's something. And then beyond just, hedging or transacting, the South African Rand is also one of the most traded forex markets globally. It's got linked to commodity markets, to a reliable monetary policy within emerging markets. So there's also potential opportunity to leverage the power that blockchain rails and crypto rails bring, but with a new local fiat on offering.
Absolutely. And I mean, on that point, when we think of the future, Paolo, and I mean, you're not letting the grass grow under your feet, as Aleks mentioned, launching the dirham coin. Cryptocurrencies, as I said earlier, are really still in their infancy. So what do you envision for Tether's future in a world that's so rapidly evolving? Are there any new features or expansions in the pipeline?
So, well, with Tether, we have so many projects in the pipeline. So when it comes to stable coins, the DRM is very interesting. So we announced the start of development of the stablecoin. We need to provide all the information to the central bank, the local regulator, in order for them to get comfortable with the quality of our processes. That one is particularly exciting because the UA DRM is positioning itself as the currency, as an alternative currency that is backed to the US dollar, and is, UAE and Dubai and Abu Dhabi are becoming central to East and West. A lot of India trade is happening in Dubai and Abu Dhabi. There is a lot of movement. from London, traditionally a very important place for commodity trading, going directly into to Dubai. So we look at the markets, and we're trying to understand how also, and we look at geopolitics. There is no doubt that also with what happened in the last few days with Pavel Durov being arrested, I think that unfortunately the world is not going towards a nicer direction. I think that essentially, I don't want to end with gloom and gloom, but we are entering dark ages. There is a lot of instability in the world, and we have to be aware. We have to try to predict where the world is going from a macro perspective, to be able to serve our customers and give them the level of comfort and confidence that they need. Ultimately, our stable coins are something that people rely on, like for really many people, are a lifeline. And so when we wake up every single morning, we always think how we can make our company more resilient, how we can make our products more resilient. And so building new stable coins, and gold is a very important one as well, right? So if the world will go in a very difficult direction, gold, as we are seeing, is getting to the all-time highs. Gold is in many Asian central banks are buying enormous quantities of gold because they're afraid of the potential instability, even of the US dollar. So, for example, look at China. Yeah. China had 2-3 years ago $2 trillion worth of US Treasury bills, and today has then less than 800 billion, and keeps selling. So Tether in this moment has slightly less T-bills, US T-bills, than Germany. So we have around $100 billion in US T-bills. We have more US T-bills than UAE, more US T-bills than Australia and Spain. And we're a private company. If we are not a country, but if we were a country, we'd be like 18th holder of US T-bills. How crazy is that a private company is in that situation?
Wow.
But this means that, unfortunately, the success of, and this is something that is getting a little bit philosophical. Sorry about that. But it's, in a way, it's
no, please do.
The success of our companies. I think that also Luno and then other companies in the space is directly linked to the unsuccess and the future unsuccess of the traditional system, and of course, is not necessarily a nice sentiment, right? So you are growing as a company because the world is almost failing, and so, but thankfully there are companies like ours that are trying to provide, even in the darkest moments, a lifeline to people. So that's the way I see it.
Well, let's keep it a little bit more philosophical. I think what the world is going through is something of the Joseph Schumpeter's waves of creative destruction ilk at a grand global scale. And so it's uncomfortable, it's difficult, it's painful now. But I do think in its wake will emerge a new digital infrastructure and way of doing things that's far more decentralized and far more trusted, in a way that the old system just wasn't designed for. And I'm very much a techno-optimist when I look at the challenges and how we're approaching them, and very much the companies that you lead, Paolo, and Aleks as well, at the forefront of that. Just lastly, I've got to ask you, Paolo, we mentioned the Iran backed like a ZAR coin. Do you see an opportunity for the development of a local fiat stable coin like that? And how would that potentially fit into the way Tether thinks about its global crypto strategy?
So it's a tricky one because, of course, I'm not fully familiar with the local regulations, but I think that eventually, so one of the major interests of when you create a new stable coin, I think you need to look at the outside interest rather than inside interest. So is there interest from abroad, so from people living outside of the country to use that stablecoin? Because otherwise we end back into the European or American issue where it's selling an ice bucket to an Eskimo, right? So where for people living inside the country, of course, a stablecoin is a very important means of payment, but it's transport layer for all the money that they're being used to. But for people living outside that is completely different, right? It's holding a currency like through a stablecoin for people for remittances, for example. That is where the biggest interests start to come in fruition. So that is an analysis that we should do. So I don't know, not knowing the numbers out of the bat, I wouldn't be able to properly address that question.
Well, I think it still offers us an opportunity to have you back on in the not too distant future and to bring you into this debate that we are having in South Africa around central bank digital currencies as well. But sadly, we have run out of time. It brings us to the end of today's really fascinating discussion here on Business Talk. Huge thank you to our guests, Paolo Ardoino, who's the CEO of Tether, and Aleks Andjelopolj, who's the GM of Experience at Luno. It's clear stablecoins like Tether's USDT are playing a key role in providing stability and fostering trust in a very often turbulent world of digital currencies, especially in emerging markets. And with platforms like Luno making these options more accessible to everyday users, I think the potential for further mainstream adoption of digital assets continues to be very exciting. Thanks for tuning in to Business Talk here on Business Tech. Until next time, I'm Michael Avery saying stay safe, stay informed, and keep thinking ahead. Goodbye.